Good morning, master traders and money magnets. Last Friday, we got the rug pull. Hallelujah. Rug pull on SPY, rug pull on QQQ, Tesla with a nice drop as well, rug pull on NVDA, rug pull on IWM. We already had the breakdown of Apple from Thursday. Friday was just bearish continuation, but as you can see, rug pull for Apple and a big pop to the upside for VIX. VIX staying above 16 was truly a blessing. Let's see what the market makers have planned for us this week. Either way, we are going to make so much money because we are money magnets and master traders. Claim it, claim it. Now, as far as how we traded Friday, this is very important because I'm literally giving you guys the cheat code. The cheat code on how to trade this market and beat the market makers. There's no greater pleasure than for Uncle to see himself and all his fellow money magnets whoop those market makers asses. Oh, it's amazing. And what did I write in my general lean? Once again, despite a red candle on a daily chart, no critical level was lost. 667.34. I wrote this before the big drop. Okay, this was Friday morning, and I wrote today I am watching 671 and 667.34 as critical support levels. To be bearish, both these levels must fail, preferably rug pull style, for me to lean bearish. Did we get that rug pull style drop? Yes, we did. So I am leaning bearish. You can see on the 15-minute chart, SPY started off bullish, possibly trying to draw in some dip buyers, and it cleared my 672.5 level right there on the 15-minute chart, and then it hit my next level at 674 on the next candle. That was good for a level to level move. I used the 15-minute chart to enter and confirm breakouts and breakdowns. And then when do we exit? When it hits the next target or when it hits our stop loss. In this case, if you long the breakout of 672.5, which I alerted in the group, nice breakout of the 672.5 level and already working its way to 674 level. 672.5 to 674. It hit that level. Then what happened? We had a hot stove rejection and went and back tested 672.5 as support. And what happened? Thanks to President Trump with his tariff talks, we managed to break down 672.5, but 672.5 breakdown was not good enough for me. As I wrote in my general lean, the main levels I was watching was 671 and 667.34. I was watching the critical levels, and boy oh boy, we had the breakdown of 671 on that 10:45 to 11 o'clock candle. Not only did we break down 672.5, but we broke down 671 with lots of strength. That right there, that breakdown right there told me everything I needed to know. And what did it tell me? It told me, Uncle Charters, you need to buy some puts. I don't care how much it costs you, you need to buy some puts. And look at what happened for the rest of the day. Holy moly, donut shop. A $20 plus drop to the downside all in one day. And all we needed to do was wait for the right setup. The breakdown of 671. It also broke down my 667.34 level. As you guys can see, there was no buy orders to prop SPY up from that area. We sliced through it all like butter. The last time we seen a $20+ drop like this was back in late July into August, and that one took 2 days with the gap down in the middle. Obviously last Friday's action was so much more impressive. But what happened? That $20 correction eventually led to more upside. It gave the bulls a chance to buy the dip, and eventually we hit new all-time highs. So is Uncle saying now is the time to buy the dip? Nope, I'm not saying that at the moment. What I am saying is we need to always know the context. President Trump talking about tariffs again. Financial Juice reported it. The price action reflected it. It wasn't CPI like I thought. It wasn't FOMC like I thought that would put in the top. It was talks of tariffs once again. We're gonna buy the dip, are we? It depends on what the price action tells us. When I say looking at the context, one of the things I mean is we need to look at the last critical level that was lost. For me, that was September 25th's low at 654.41. That was the last critical level that was lost for SPY. There's a good chance that because of the trend move that we had on Friday, tomorrow could be a choppy day. consolidating sideways to prepare for the next move. It could also be a bullish reversal or a bearish continuation. So what I want to do is not just try to make predictions, but give you guys actionable trade setups, like real deal actionable trade setups that you guys can try so that we can all make money in the stock market, because the market will be open tomorrow. Bonds will be closed, but the stock market will be open. So if we are going to get a bounce going, the first thing that must happen is a false breakdown setup. All my master traders and money magnets that's been watching me for a while, you guys already know. We don't call tops, we watch for false breakout setup, which worked very well on Friday. And it's going to be the same approach, but in the opposite direction as far as buying the dip goes. We need the false breakdown setup. That means a lost level must be recaptured. 654.4 as of recording this is the level that I'm watching that must recapture to possibly put a bounce back to the upside and play above 654.4. I do have 656, 658, 660, 662, 664. All must recapture. Use the 15 to 30 minute chart like Uncle always preaches in almost all his videos. But we want to recapture some lost levels. Don't call it bottom unless we get the ultimate false breakdown setup. Squeeze. Some type of squeeze. False breakdown, lost levels getting recaptured. That is what you guys want to be watching out for if you are a bull. 654.4, 656, 658 or higher must recapture. I'll definitely go more in depth with these levels in my Discord in real time, but this is the plan for tomorrow. If you're going to play it bullish, if you're going to play it bearish, maybe you're already holding puts from last Friday. Maybe you had yourself a great entry and you want to see if the market will go further down. If the answer is yes, you want to see September 25th's low defend as resistant. It doesn't really have to defend as resistant so long as the price can stay below that pivot level. As long as price stays below that pivot level, then bears can expect more downside no matter what the RSI says, because oversold can become more oversold. So we're below 654.4. There's no reason to be bullish just yet. The next support level that I have is at 653, 651, and 649.8. That is a fib level. For more downside to be had, those levels must fail. If they do, keep holding on to your puts. If you are looking for an entry for puts, watch for the breakdown of those levels. Remember that fear a lot of times can be stronger than greed. With greed, you'll see people buying the dip and we'll get these slow melt ups. But when there's fear, when people become afraid, look at that. Look what happened on Friday. So if we break down those support levels, it's not that you're catching FOMO, but you're just strictly playing the price action, and you do it level to level style so that we can minimize risk. So if 653 fails, you want to look to take profits around 651 or 649.8. If 649.8 fails, you want to look to take profits at the next area around 648 and 646.8ish. Play it level to level style, and when it comes to the home run moves, to the potentially bigger moves, you catch those moves with your runners. This is the money magnetic way. So let's go over this one more time real quick. Above 654.4, possibly a bounce, but they'll need to clear 656, 658, and 660 to show some bullish follow through. Use the 15 to 30 minute chart to confirm your breakdowns and breakouts. If we're below 654.4, that's still overall bearish. No reason to go long. No reason. And if we break down 653 and 651, and especially the fib extension at 649.8, that is your bearish follow through that this sell off is not done yet and the fear is going to continue. We're looking at QQQ for more downside. 588.5 and 587 are the two levels to watch. If those levels fail, there's no reason to be bullish or count on a reversal, because those levels fail, we're likely heading down a lot lower, down to 585.5, 584, 582.6, 581, and the fibs extension level at 579. If you do want to play a potential bounce, we need the right setup, and that would require 590 and 591.78 to recapture. So like the false breakout leading to some crazy downside, we need the false breakdown setup to trigger a bounce that can potentially give us a crazy pop to the upside. 590, 592, and 593.78 must clear, must recapture to put 597, 599, 600.84, 602, and 603.7 all back in play. Let's keep this very simple and allow the price action to tell us what to do. If you guys need help trading this, interpreting the price action, definitely look at the pinned comment below and enter Uncle's Discord community, and let's kick the market makers' asses together. I love it. Here is Tesla. Now, I wrote in my Discord about Tesla that 426 was the level to watch as support, and if it's lost, we're going to be bearish. And it was lost. It also took out the 415 fib level, closing below that as well. So as long as below 415, I do favor more downside. For bearish follow through, 413 and 411.5 must fail to put 410, 408, and all the way down to 405 or lower back in play. There is a gap fill around 396. I would not be surprised if Tesla goes to fill the gap. If you guys do want to play a potential bounce, 415 and 417 must recapture to put 420 and 426 back in play. If 426 can recapture, I would lean bullish again in favor. We go back to higher highs, potential higher highs, at least back to 442. But overall, I'm bearish below 426 and definitely bearish below 415. NVDA with the beautiful rug pull finally gave us the false breakout setup. You guys can look at this blue line based on the 184.5-ish level. It was a tough resistant level in August and even in September, but we finally cleared it in late September, where it was treated as support a couple of times in early October. But last Friday, there was no buying pressure there. They couldn't hold it. That is a false breakout setup as long as below 184.5. So we're below that level, stay bearish and favor more downside with 183 and 180 as my targets. Below 180, that's your bearish continuation, and we'll likely head back down to the mid to low 170s. Trust no bounce unless the false breakout setup gets invalidated. That would require NVDA to recapture, at least on the 15-minute chart, to recapture 184.5 and 186. If that can happen, then we can get a bounce going. Play it level to level style, 188, 189.2, 191, and 192.2 all back in play. But as long as below 184.5, false breakout mode, which means to stay bearish. IWM also with his own rug pull and beautiful breakdown. After a couple of low volatility days with an inside candle setup, we broke down the range and we hit a previous buy zone, which is around 237.5. It paused there, but if it break it down tomorrow, 237.5 and 236 fail as well, we can expect the sell-off to continue for another $5 to $10. If we are to get a bounce, trust no bounce unless 240 and 241.73 can recapture. If those levels recapture, 243, 245, 247, and 248.5 would all be back in play. Here is Apple. Now, for the record, Apple had the breakdown of structure on October 9th. Shout out to the Spy Day Trader. He's another YouTuber. He loves to talk about structure, but we did have one and we broke it down October 9th, which Uncle addressed on his YouTube video and his Discord. So Friday's breakdown or sell-off to me was not too surprising, and it was definitely bearish follow through going for the gap fill. Apple has a lot more gaps to the downside, so we'll see if they'll continue to fill some more gaps. But either way, 245.5 is the level to watch. If we are below 245.5 and 244 fails, we can expect more downside. 242.5, 241, and 239 or much lower would be back in play. If we are to play a bounce, I need to see 248 and 250 recapture to put 252, 254, 256, and 258 plus back in play. Trust no bounce unless we get the false breakdown setup. For Apple, that's a recapture of 248 and 250. Otherwise, stay bearish. And here is the VIX. Beautiful, looking like a cup has been formed. Will we get a handle next? Will there be bullish continuation? or is it pullback time? 22 is resistant level. I'm hoping it breaks out. I'm not gonna lie, I'm hoping it breaks out. If 22 clears, 23.7 and 25 plus would be back in play, because when the VIX is up, volatility is up, and there's gonna be so much money for everyone to make. Uncle's money magnetic style of trading works so well when the market is volatile. So yes, I do want to see VIX continue to go up, but if it doesn't, we're gonna trade whatever is in front of us. I prefer to trade with high volatility. Some people actually don't like high volatility. They prefer low volatility. There's no problem. When you're a money magnet, you can trade any market. You can have your preferences, no problem. But remember, when you're a money magnet, you can trade any market. So if 20.2 has support there and 19 fails, we can expect downside and say goodbye. Well, I wouldn't say volatility is over. I would think volatility is over below 16. But I think losing those support level would be a healthy pullback, and maybe we'll form the handle, which could eventually lead to more upside. But either way, 22 is resistant, 20.2 and 19 are support. Those levels fail, we can go back and retest that 16 level. We don't want to see below 16, but it can retest 16 if those support levels fail, with 14 below that. Otherwise, it's looking bullish, and I would stay bullish as long as above 20.2. Now, before I let you go, here was the DarkPool level from Friday, 671.20. There was 1.8 billion in premium at that level, and I want to remind you guys, the day before that, there was, I think, about $2 to $4 billion in premium at the 671 level the day before the rug pull on Thursday, and it was shared on Uncle's YouTube video. So make sure you guys are subscribed so you don't miss out on these important price action information. And it was some continuation. It wasn't exactly at 671, but 671.2, 1.8 billion. That's a lot. So these DarkPool levels are truly helping out a lot when it comes to trading. When you're below these big levels, that's when you want to get bearish. And when you're above these big levels, that's when you want to get bullish or expect more upside. I'm not seeing any big orders at the lower levels except for 652.94. We had 293.8 million in premium. So keep that level in mind. 652.94. We had almost $294 million in premium. It's not over a billion, but I'd say that's a lot. Now, one of my levels was 653. Below 654.4, I had 653. So that's not quite at my support level, but it's a few cents away from each other. So it'll just gives me more reason to be bearish if I see that 653 level fail. We can combine it with DarkPool. Are you guys with me? Let's kick these market makers' ass. To do it, knowing the levels and the setups and the willingness to trade it unbiasedly in real time is needed and will help us all a lot. But the most important thing that you must have is the right mindset. Uncle does not call you money magnets for no reason. I call it to you guys because it's the truth. You want to stick to the facts, or do you want to stick to the truth? Because everything that you see in front of you is just a shadow of the past. Even the cell phone that you're looking at, the TV that you are watching, is just a shadow of the past. So we can stick to the facts, or we can stick to the truth. And the truth is, you are a money magnet. Everything that you see in front of you in this three-dimensional world started off as an imagination before somebody made it come true. That is the law of this world. It starts off in the unseen before it can be seen. So just because something cannot be seen does not make it untrue. So if you are one of those people that cannot see themselves as a money magnet simply because of what your P&L is showing you, simply because of the circumstances you're going through in life currently, you are the master. In the Bible, my Lord and Savior Jesus Christ said, the kingdom of heaven is inside of you. I need y'all to tap into that. Don't look for God like he is separated from you. God is not separated from you. He is literally within you. Your body is his temple. So look within yourself and know that what Uncle is telling you is not a lie. You are a money magnet. It was Peter's doubt and fear that made him fall into the water. When he was literally walking on water, he fell because of his doubt and his fear, and he allowed those big waves that he saw in in a three-dimensional world to scare him. You guys, my fellow money magnets, we're not gonna do that. We don't walk by sight because our eyes can be deceiving. We walk by faith. That's where God is. That's where the truth is. That's where we are. Walk with Uncle by faith. We are money magnets. Money is not above us. It is beneath us. So when we command it, it will come. So help us God. I love y'all. Peace.